Yes, sir. Sir, very happy afternoon to all. So we have completed 6 questions out of 7 questions in the chapter cost of capital. We are moving to the last question, man. 7th question. Very good question. Company issues 15% convertible debenture of rupees 100 each at par. So you will be getting 100 rupees in your pocket with a maturity period of 6 years. So the life of the debenture is 6 years. So they have indirectly said that, directly said that the debentures are redeemable. Fine. On maturity, each debenture will be converted into 2 equity share of the company. Instead of paying them cash, RV redemption value, they are going to give the equity shares. Fine. The risk-free rate of return is 10%, which is RF. Market risk premium, RM minus RF is 18% and beta 1.25%. 25. Company has paid dividend of 12.76 per share. Very good person, man. 5 years ago, it paid dividend of 10 per share. So that is present value, future value. 10 rupees has grown to 12.76 with a gap of 5 years. So basically you do one thing. I will tell you one shortcut. Okay. Let me read the question. Flotation cost is 5% of the issue amount. Then second part is talking about preference share. 5% preference shares of 100 each at a premium of 10%. These shares are redeemed after 10 years at par. Flotation cost is 6% of the issue amount. Assume corporate tax rate of 40%. Calculate the cost of convertible debenture using approximation method. Wow. KD is equal to I into 1 minus C plus RV minus NP divided by N whole divided by RV plus NP divided by 2 into 100. Fantastic, sir. Use YTM to calculate cost of preferences. That means sometimes you are very strong in approximation method. That's why they ask second part YTM. Sometimes you love YTM, sir. Approximation method is saying that how you will miss me? Yes, sir. I want to calculate. That means both they are, sir, testing in this question. First of all, let me find out the KE cost of equity. The one thing, very happy news is which is RF plus beta into RM minus RF. RF is equal to 10%. That is a risk-free return. Beta is equal to 1.25, not percentage times and all, 1.25. RM minus RF is what? Premium, given in the question as 18%. Pakka, sir? Which is equal to 10% plus what is the beta? 1.25 into what is the RM minus RF? 18%. That means 10% plus 18 into 1.25 comes to 22.5 plus 10 comes to 32.5 is the KE. They are the real payee. Because look at the expectation of the equity shareholders, man. 32 point. If they give 100 rupees to the company, they are expecting 32 rupees 50 paise as a return. Velango. Right, sir. So that's what, sir. We'll check the answer for this part. Calculation of cost of convertible debenture. Actually, I'm supposed to calculate the KD only. But without KE, I can't find out the. Given that RF 10%, RM minus RF 18%, beta 1.25, DPS, sir, 0, that is 12.76 at the before the 5th year it was 10. Flotation cost is 5%. Using CAPM, KE is equal to 32.5%. Fine, sir. Very good, sir. Fantastic, sir. Come on. What we are going to do, just listen very carefully. They are playing with concepts. Pakka pure concepts, logic they are playing. What they are saying is, sir, here, year 0 and here it is year 5. Year 0, that is 5 years before, they paid a dividend of 10. And after 5 years, they paid a dividend of 12.76. 12.76. Right, sir? So this is basically present value. This is basically future value. Let me ask you a basic LKG question. In compounding, who will be more, present value or future value? Thank you, sir. So we need some rate because this would have compound rate, some rate. So I will tell you a formula for the rate in the financial management. Okay. Sir, future value divided by present value. What by what? We know current ratio is equal to current asset divided by current liabilities. Always current asset should be more, technically. Should be more. Numerator should be more. Who will be more, future value or present value? 12.76 divided by 10 comes to 1.276 is the factor, growth rate factor. You call it as factor, adjustment factor as per AS20. Like that, anything you want to call, you call. I don't have any problem because I only find out this. Hello, sir. That means what they are saying, today's 1 rupee is after 5 years 1.276. 1 point at some rate. That rate is what? Our parlay G. Right, sir. We are going to find out that what? Growth rate. Right, sir. Yes, sir. Growth rate. Sir, 1.276. Don't do anything. Don't do anything. Don't do anything. Just come here. That's why this is present value table, future value table. They have given, look at here, 1.276. Exactly 5%. Don't do trial and error and all. Oh. Sir, this is how you have to use the table. Oh, for that purpose only table has been given in the question. Without this, you will be, I know, 1.03 into 1.03 into 1.03 into 1.03 into 1.03. It is not tallying. Again, come to 4%. That and all we are supposed to do for the last question, because in the last question, this table was missing. Hello, sir. For that only present value table. So, this will be used for discounting. Future value table. This will be used for compounding. Yes, we are in the verge of compounding. Comfortable? And exactly the matching, 1.276. That means here also 1.276. So, we can finalize that growth rate is equal to how much percent? 5%. Growth rate is equal to 5%. This is what even Icai has also finalized. Calculation of growth rate in dividend. 12.76 is the future value. 10 rupees is the present value. It should grow at some rate for how many years? 5 years. So 1.276, which is nothing but what value by what value? Future value divided by present value. Always future value should be more. Right, sir? Is equal to 1 plus g raised to n. So 1 plus 5% raised to n comes to 1.276 from the future value table. They have given the future value table. We check the future value table. We got the right answer also. Hello, sir. So the g is equal to how much percentage? 5%. From here, the game starts. Here, the logic starts. What they are saying in the question. 15% convertible debenture. That means you have to convert the debenture. Of how much each? 100 each. At par with a maturity period of 6 years. So, after 6 years only you are going to convert. Right, sir? On maturity, each debenture will be converted into 2 equity share of the company. So, I should know what is the value of 1 equity share. If I know what is the value of 1 equity share, I can give them 2 equity share. Right, sir? That is the RV, redemption value. Because redemption value is missing in the question. Redemption value is the value of the 2 equity share. That means, just be with me, KE is equal to DPS1 divided by MPS0 plus G. Right, sir? In our lifetime, first time, we are going to bring plus G to here, which is KE minus G is equal to DPS1 divided by MPS0. Right, sir? I don't want KE minus G because KE, sir, already I find out using RF plus beta into RM minus RF. Just now I finalize the G as how much percent? Right, sir. I know DPS1. DPS what? 1. Because now they are paying some 12.76%. 12 point? Right, sir. Yes, sir. But I don't know MPS 0. MPS 0 means I don't want the share price today. Because today only debenture has been issued. After 6 years, what will be the share price? That means MPS 0 should be equal to DPS 1 divided by KE minus G. Are you getting the logic? This MPS 0 means, my dear lovable students, MPS 0 means, hello sir, the price of the share after 6 years. Price of the share after? Because after 6 years only we are going to redeem the debenture. On that day, what is the market price of the share into 2 will be the redemption value. Clarity? So think very properly, think very clearly. MPS 0, that's what they have mentioned as price of share after how many years? 6 years. So here one kutty logic is there. What is that logic? I will explain to you clearly. Understand, sir. If MPS 0, sir, if you want the market price, which is MPS 0 is equal to DPS 1 divided by what minus G? KE minus G, which is nothing but MPS 0 is equal to DPS 0 into 1 plus G in 1 plus G raised to 1 raised to divided by KE minus G. Are you really with me? That means DPS 1 means what? DPS 1 means what? DPS 1 is equal to DPS 0 into 1 plus G raised to 1. Since it is raised to 1, I am not putting 1. That means here DPS 1 means, sir, you have to take the current year dividend. You have to take the plus the growth rate at the end of the first year and so on. At the end of the first year and that means, my dear lovable students, be very specific. So in order to find out the current market price, that is market price on today, you are taking the last year dividend. Hello? Whatever dividend you paid last year, that is what? DPS 0 into 1 plus G, that is a growth rate of the first year of the. Hello, sir? If this is the case, you need the market price, which is MPS 6. MPS 6, that is a market price of the equity after the 6th year. 6th year. That means it should be DPS 0. DPS 0 of the 6th year of the into 1 plus G of the 7th year. 1 plus G of the, because current year, for example, today you are calculating the market price, which is what? 0? MPS 0. What formula you are using? DPS 1 divided by KE minus G. What is DPS 1? DPS 1 is equal to DPS 0 into 1 plus G raised to 1. Hello? Since this is raised to 1, we are not putting the raised to 1. Comfortable? So if you are finding out the market price at the end of the 6th year, you have to take the dividend at the 6th year dividend and you have to take the growth rate of the what year? 7th year. Clarity? If that is the case, my dear lovable students, what is the, sir, market price we are going to calculate? Be with me. Market price of the share after 6th year should be, what is a current? What is a current? 12.76. Are you thinking that 12.76 will be there for the next 6 year or it will grow? It will grow at a growth rate of 5%. That means, my question, will it grow for 6th year or 7 year? 7th year. That's what logic I said. Hello, sir. So 1.05 into 1.05 into 1.05 into 1.05 into 1.05 into 1, 2, 3, 4, 5. 1.05 into 1.05. Don't put in calculator and all. They have given table. Why are you worrying? Why are you worrying, man? Future value they have given, man. At the rate of how much percent? 5%. 7 years comes to 1 point. Are you all getting 1.403? So 1.403 is the future value. That is today 40. You are getting 407 in calculator. One point, sorry sir, 1.407, right sir? Are you all getting 1.407? Yes sir. So you are getting 1.407. Okay man. At 5% growth rate, no. For how many years? 7 years. Why 7 year? Why not 6 year? I am repeating once again. I am repeating once again for your benefit, because that is the only area where you will get confused. Let me ask you a question. Leave all this discussion. Come back. Sir, have everyone know KE is equal to DPS 1 divided by MPS 0 plus G. Everyone know this formula? This plus G can I bring here? That means KE minus G is equal to DPS1 divided by MPS0. Are you comfortable? Sir, I don't want KE minus G. I don't want DPS1. I want MPS0. Hello, sir. That means MPS0 is equal to DPS1 divided by KE minus G. Sir, do you know everyone know this formula? Now question arises, what is DPS1? DPS1 is equal to DPS0 into 1 plus G raised to 1. Raised to 1. That means DPS0 means current year dividend. Hello, sir. It will grow at the growth rate of the first year. Growth rate of that is 1 plus G raised to 1. Hello, sir. If the same logic applied, I don't want the current year market price. I want the market price end of the 6th year. Hello, sir. Then 12.76 into 1.07. 407. 1.407. Because, sir, every year it will grow for 5%. So 1.05 into 1.05 into 1.05 into 1.05 into 1.05 into 1.05 into 1.05. Hello, sir. Because if I need the market price at the end of the 6th year dividend. Hello, sir. At the 7th year growth rate. Because for current year, you have taken the dividend of the current year with the growth rate of year 1. Clarity. For year 6th, you are supposed to take for the growth rate of year 7 and so on. Hello. Clarity. That means 12.76 into 1.407 divided by what is the KE you find out? 32.5 minus what is the growth rate? 5%. Fantastic, sir. That means, my dear lovable soul, take your calculator. 12.76 into 1.407 comes to 17.95332 divided by 32.5 minus 5 comes to 27.5. Comfortable? 17.95332 divided by 27.5 into 100 means 65.28 per share will be the value of one share at the end of the 6th year. At the end of that means for every debenture they are going to give 2 shares. That means into 2 will be 130.56 rupees will be the redemption value for one debenture. For one debenture, they are going to give 130.56 is the redemption value. Are you comfortable what I am talking to you? Now, my dear lovable students, we can use our general formula that KD is equal to I into 1 minus T plus RV minus NP divided by N whole divided by RV plus NP divided by 2 into 100. Comfortable, sir? What is I? I stands for interest. How much percent they are going to pay? 15% convertible debenture, right, sir? So it is going to be, I is going to be 15 into 1 minus, what is the tax rate? So 0.4 will be the tax rate plus, just now you find out RV 130.57 130.56 minus net proceeds is there, no? Sir, today what is the net proceeds? What is the value? 100 each. 15% convertible debenture of 100 each at par, right, sir? Is there any flotation cost? Yes, sir. Are they issuing at par or premium or discount? So if they get 100, 5 rupees will go as flotation cost, balance 95 will be there. Yes, sir. So the net proceeds will be 90. What is the life of the debenture? 6 years. Whole divided by 130.56 plus 95 divided by 2. Are you all really with me? So my dear lovable students, 15 into 60% comes to 9 plus 130.56 minus 95 means there is a capital loss of 35.56. That has to be written off over a period of, so 5.926 whole divided by 130.56 plus 95 divided by 2 comes to 112.78 into 100. Are you all really with me? That means 9 plus 5.926 comes to 14.926 divided by 112.78. Right, sir? Into 100 divided by, that means 14.926 divided by 112.78 into 100 means 13.23 percentage is the KD as per what method? Approximation? That's what they have written as 13.24 percentage as the KD. As per approximation, we get 13.23. Hello. Very comfortable. Pakka, sir. Fine, sir. They need one more part. So now you read the first part of the question. You'll be able to appreciate or understand that in a very, very better way. 15% convertible debenture. Okay, they are going to convert the debenture. Of rupees, how much each? 100 each. At par. At par. At par. With a maturity period of how many years? So after 6 years, I am going to redeem the debenture. On maturity, each debenture will be converted into 2 equity share of the company. So I want to know what is the market price of the equity share after the 6 year. Hello? For 1 share. Into, if you multiply 2, you will get the total redemption value of the debenture. The risk-free return is 10%, market premium is 18%, and beta is 1.25%. By using that, you can find out RF plus beta into RM minus. Company has paid dividend of 12.76 per share. 5 years ago, it paid dividend of 10 per share. So you are having future value 1% value. If you put future value divided by present value, you will get the, sir, what is the compounding rate? 1 point something. You can go to the future value table. At what percent within 5 years it is reaching, you can find. You can say that growth rate is equal to 5%. Comfortable? And flotation cost is 5% of the issue amount. Super, sir. Fantastic, sir. Brilliant, sir. Coming to the second part of the question. 5% preference shares of how much each? 100 each. At a premium of, that means, sir, 110 rupees is going to be the issue price. Because 100 rupees is the face value. At a premium of 10% means 10 rupees. Right, sir? These shares are redeemable after. So they are redeemable preference shares. Then only YTM will be applicable. Since the shares are redeemable, then only YTM will be. Sir, if it is irredeemable, sir, YTM will not be applicable. Flotation cost is 6% of the what amount? Issue amount. Less what cost? Flotation cost. So 110 into 6% come to 6.6. So 110 minus 6.6 will be 103.4 will be the present value of an asset. What the YTM is teaching to us, man, as per YTM approach, yield to maturity approach, the present value of any asset, or if you are having any confusion regarding the present value, you can say that value of any asset today, value of any asset today should be equal to present value of its future cash flows. Right, sir? Let me ask you a question. Very easy question. Okay. As we all know that KP is equal to PD plus RV minus NP divided by N whole divided by RV plus NP divided by 2 into 100. Sir, they asked YTM, why are you putting approximation to guess the rate? Are you really with me? What is the preference dividend? 5%. 100 into 5 means 5. Plus RV available? Have they said that at par? Yes, sir. So 100 rupees is the redemption value. Minus 103.4. Goodbye. Because today the preference shareholder will give it 103.4. After how many years? 10 years they need only 100. That means this is a capital gain. Will reduce as the cost of capital, right, sir? Divided by what is RV? 100 plus what is NP? 103.4 point divided by 2 into 100. Ennappa. So 5 minus actually 100 minus 103.4 comes to 3.4 divided by 10 means 0.34. Are you really with me? Divided by 100 plus 103.4 divided by 2 comes to 101.7. Are you really with me? So 5 minus 0.34 comes to 4.66 divided by 101.7 into 100. Are you all really with me? So 4.66 divided by 101.7 into 100 comes to 4.58% is the KP. Hello? So I will discount at 3% as if I don't know anything. I will discount at 5% as if I don't know anything. Hello? That's what our Chella Kuti also would have done, 3% and 5%. Fantastic to the core. Hello, sir. This is the best technique I can provide you, right, sir? Now, this and all, no, I am very expert in capital budgeting. I know how to do it. So, as if not, this and all should be there in your question paper only. Okay? And as if you have guessed like anything like 2 minutes, 3 minutes, you thought that 3%. I'm going to try. Yes, sir. Come on, sir. 3%, sir. So, this is cash flow. Okay, sir. Then, PV ratio. PV factor at how much percent? 3%. Discounted cash flow. Year also should be there, no? Yeah. You should say at the time. Not hippo. Year. Then what? Cash flow. Present value factor at 3%. Then, discounted cash flow. Goodbye. Come on. Year, sir. 1 to how many year? 10 year. What is the preference dividend? 5 rupees. Right, sir? Present value factor 3% you have to put. 1 divided by 1.03 is equal to. Already given in the question. Very good. Then use that. Okay. Present value factor for how many years? 10 years. At 3%. Come to 0.7. This is what, man? Only 10th years. Better we itself will do is equal to NCT. Right. If you see and add this, no, you will miss 1 or 2 numbers. Yes, sir. Why this colovery? Come on. How much? 8.530. Okay. So, 8. Total also they have given, man, here. 8.53. The 3% total. T they have given. Okay. Present value annuity factor also given. Very good, sir. Even 5% also given. So indirectly they themselves saying that try at 3 and 5. Don't expect every question to be having this. Yes, sir. So 8.530. Fantastic, sir. Up 8.530 into 5 comes to 42.65. Hello, sir. And on 10th year, you will be having, what is the redemption value? 100. So that they themselves given. You can use that. 0. Okay. 100 into 0.744 comes to 74. What is the discounted cash inflow? 42.65 plus 74.4 comes to 117.05. Less discounted cash outflow. What is the cash flow? 103.4. 103.4. So you are getting NPV, net present value of 13. Okay, man. Anyway, I know that. I know. NPV will be positive only. I know. Right, sir? The same imposition I am going to repeat for 5%. Sir, year, cash flow, present value factor at 5%, then discounted cash flow. Hello, sir. Year will be 1 to 10 years 5 and 10th year you will be getting 100. Now this time I am going with 5%. For 5% total is 7. So 7.722. Comfortable? So 7.722 into 5 comes to 38.61. Are you really with me? And here for 10th year, just take the fifth one, 0.614. 0.614. So 61.4. Hello, sir. So 61.4 plus 38.61 comes to 100.01. This is the discounted cash inflow. So my discounted cash outflow will be 103.4. So my NP will be negative. How much? 3.39 will be in bracket. Right, sir? I have to do the interpolation. Shall we do the interpolation? This is at 5% and this is at 3%. At 5% it is going to be 3.39 minus. I want NPV should be equal to 0. Right, sir? And there how much, man? 13. Are you really with me? So 13.65 plus 3.39 comes to 17.04 is the total distance you have traveled. That means 3.39 divided by 17.04 into how many miles you travel? 2 miles. So 3.39 divided by 17.04 into 2 comes to 0.397. Right? Can I take it as 0.397? 397, 38. So from here I have to minus 5%, right sir? So 5 minus 0.397, right sir? So 5 minus 0.397 comes to 4.602% is the KP, right sir? 4.602. Here we already find out something, right sir? 4.58, because that is approximation method, right sir? But this is IRR, YTM. This will be more accurate, right sir? But more than this one thing will be some more accurate. More than this rate, no. We have to check what ICI's rate. That will be some more accurate. So they are saying that cost of preferences 4.6021 as their answer. 4.6021 as our answer. Are you comfortable? Yes sir. That's it with regard to the cost of preferences using the YTM method. With this, we can say that we are through with the chapter cost of capital. Cost of capital comes to an end.